Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Hantech Markets. Each week I take you through the key events I believe will be driving your investments in the coming days. Now, moving into this week, we've had a lot of key data points last week, a lot of key fundamental political events, which could drive some positioning for the dollar in the coming weeks and months. And it's interesting that the market is still settling down from that. We've had tax reform being announced in the States, and the markets have just sort of pulled back expectations a little bit of inflation going forward. Certainly the longer dated yields have continued to fall. You look at this chart that I've got of the 2's10 spread, that shows that the spread is now around 71 basis points, which is the lowest it's been in 10 years between the shorter end of the curve and the longer end of the curve, which reflects a flattening of the yield curve. That could have an element of Jerome Powell coming into that as well. Jerome Powell was seen as a continuity candidate, a little bit on the slightly arguably on the dovish side, certainly compared to his alternative for the Fed chair, which was John Taylor. But the dollar remains strong and it continues to pull higher. It's certainly on the dollar index. It's maintaining its breakout. You look at the likes of the forex majors such as euro dollar, which have broken down. So the dollar remains pretty strong. And moving into this week, there's not a great deal of economic data to really change that. We had payrolls on Friday, which was a very difficult payrolls report to really read too much into, really, not because of the fact that the market was surprised by it, the fact that it was so impacted by the hurricanes, and it's sort of balancing off on a net basis on the 2 month that we've had that have been impacted by the hurricanes, but markets are still looking out for a December rate hike, and that is the main focus, I think, for driving this dollar strength. So what we've got is in the forex markets, we've got euro dollar, which remains broken down under 1660. We've got cable that's targeting, or certainly testing, that key support around $1.30. Is that a key floor that's going to remain intact? You've seen a sort of a confluence of supports around that level, and that's holding on Monday, and the market is pulling higher. But will that remain so? It could come under pressure if there is further sort of concerns over Brexit. Anytime Brexit is mentioned in a negative fashion, we see sterling falling away. Now, as I said, euro dollar, we've got the breakdown below 1660. That gives us an implied target of 200 pips in the short to medium term, but perhaps even sort of 400 pips of downside in the coming months. So that continues to be sold into. Overhead supply remains in place around that 1660 level, which is the neckline, and I think that is going to continue. Dollar yen's a very interesting one. It continues to track very closely to the sort of moves on the 10-year Treasury yield, and 10-year Treasury yield falling away on Monday morning. That has not helped the fact that dollar yen was looking to break out. It reversed a bit of that breakout to sort of unwind that move a little bit, but that, I think, remains a key sort of test this week. Now, we've also got central bank decisions from the RBNZ, Reserve Bank of New Zealand, and also the RBA, the Reserve Bank of New Zealand, of Australia this week. So we've still got those to look out for. Likely to be that they remain on the dovish side nonetheless. So you've got a look at equity markets, which continue to push higher. You've got Wall Street closing all-time highs virtually on every day or every other day now. Is the strength of that run higher going to continue? We're sort of 4/5 of the way through earnings season now. We've still got another sort of 40-odd S&P 500 companies to announce this week. So it's sort of coming to the end now. Will that momentum continue to pull higher when earnings season starts to wind down? That will be the interesting factor there. In terms of DAX and FTSE, they are still very much negatively correlated to their respective currencies. So the euro weakening helps the DAX. The strength of the DAX pulling higher is certainly into new high ground, and certainly remains pretty strong in the due course. Now what we've got is FTSE 100 pulling also towards all-time highs. That has come on the back of sterling weakness, which was driven through the Bank of England. Now, if the sterling continues to hold up above 130, then maybe FTSE will struggle to break out to new highs. In terms of your commodity prices, you've seen gold coming under pressure as the dollar has strengthened in recent weeks. That's turned into a bit of consolidation recently, even though the dollar has started to sort of creep higher again. but this is the gold price coming back to a key confluence of supports again, 1250 to 1260 area. So those are the supports that we need to watch. Market still uncertain as to exactly the next direction on gold. Something that the market isn't uncertain about is pushing oil price higher. We've got falling inventory levels. We've got the Baker Hughes recount in the States falling on Friday. We've got positive demand. All sort of adds up to to the oil price breaking out to 2-year highs on both WTI now and also on Brent crude. So holding on to those gains is key. So throughout this week, we've not got a great deal to really impact the markets. No major tier one data to really speak about, as after those central banks for the Australia and New Zealand central banks. After that, you've not really got a great deal. You've got the Chinese trade balance, Chinese inflation. Other than that, nothing really out from the States, nothing really major from the UK either, or the Eurozone. So we're not looking at too much to sort of impact on those trends, other than the prospect of tax reform, which continues to be debated throughout this in committee stage throughout this week. Will that be stalled? Will it sort of start to go through quickly? The speed of the progress of the tax reform bill, I think, will be key for the Treasury yields pulling higher and also the dollar strength. So that is the key factor I'm looking out for this week. So with that in mind, I wish you good luck in your trading, and I'll speak to you next time. Thank you.